Okay, in this video we're going to be looking at the 5-sector flow model. This is a really important part of the course. A lot of the times when you're referring to what we call demand and supply side factors, which we look at next chapter, it's really important that you're using the language associated with this 5-sector flow model. And here's what the 5-sector flow model looks like. So your first flow is the supply of resources. So you have your business sector and your household sector, and the first flow is the household sector, which is basically labour or consumers supplying their resources to the business sector. So that includes supplying their land resources, their labour mainly, and their capital resources to the business sector. The second flow, well, in exchange for those resources, we get paid an income. So people get paid a wage. Those that supply land will receive rent. If you're providing savings, then you'll receive interest. So income includes all of these things. So flow 2 is the flow of income. We supply our resources, flow 1, from the business household to the business sector. Then the business sector essentially pays people, and that flows back to the household sector. And once we have these incomes, that money gets spent. So once we have these incomes, 4 things can basically happen to that income. Okay, the first thing, well, some of that income will just be directly spent on Australian goods and services. So some of that will just go straight into consumption spending. And that's the biggest component of aggregate demand. Some of that money will be saved. So some people will put that money in the bank. The government will take a significant portion of that money. So we know that companies' profits gets taxed at about 30%. Progressive income tax, people end up paying around 30-40% of their wage in tax, especially high income earners. And then some of that income will be spent on imports. So will not be spent on Australian goods and services. These 3 things, private savings, government tax and import spending, are the 3 leakages from the economy. Okay, they are basically things that put a brake or reduce aggregate demand in our economy. Okay, savings might be good for the future, but it doesn't boost aggregate demand now. Taxes slow our spending down, and import spending is not spending on Australian goods and services. These 3 things will generally be higher. These 3 things will generally outweigh our injections in a trough. Generally, the level of leakages will outweigh injections in a trough, and injections will outweigh leakages in a peak. But these are our 3 leakages from our economy. Then basically what happens is that these leakages flow into 3 different sectors. Our savings goes into banks and financial institutions. The government obviously collect taxes, and these imports flow overseas. But some of that money will actually flow back into the economy and be a part of aggregate demand in the future. So some examples of that would be the savings. A lot of that is used in private investment spending. So if that money that's saved, people will save up and buy a house, which is investment spending. Or businesses will save up and then spend money on capital and machinery. And that will be an injection into our economy as investment spending. The government will collect our taxes, but then will spend it again. They'll spend it in infrastructure. They'll spend it on public services and things like that, which boost aggregate demand as well through G1 and G2. And finally, even though this isn't a direct flow, even though we lose some money from import spending, there's also people overseas that spend their income on Australian goods and services, and that's an injection into our economy. So these are our 3 injections, and these are our 3 leakages. Injections will generally be higher than leakages in a peak, and lower than leakages in a trough. So altogether, this C, I, G, and X represent our aggregate demand. Okay, and these are some of the things will affect that, and again, that's a Chapter 5 concept. But basically, our third flow is aggregate demand. All of these things happen as a part of flow 3, and that leads into total demand for Australian goods and services. Flow 3 is aggregate demand, and that flows into the business sector because we demand things off the business sector. And essentially, the business sector match that aggregate demand and produce goods and services. So our final flow, or our 4th flow, is the final production of Australian-made goods and services, which is our GDP. And that's basically the link you need to talk about. So if I was to ask you, if consumer confidence increases, you might speak through this flow model, similar to like this. So if consumer confidence increases, consumption expenditure increases because people spend more and save less. Aggregate demand will increase because consumption is a component of aggregate demand. Firms will raise their production levels to meet the extra aggregate demand, which will lead to higher production, flow 4. This leads to increased demand for resources, flow 1, and higher incomes, flow 2. So this matches all the way through this circular flow model. And again, that higher incomes will boost aggregate demand and flow through flow 3 as well. Again, this multiplier effect. Here's just another way of looking at it. Another graph. Again, Households provide workers to the business sector. Businesses pay wages, and then that comes through consumption spending, savings, taxes and imports, and it flows again out through exports, private investment and government spending. It's just one extra thing that this one here represents. It shows you that some of this savings, while most of it will go to investment spending, some of it will actually go back into consumption spending. So for example, if a family was to save for a holiday, they would save and that would be a leakage, and then that would inject it back into the economy once they go on a holiday through consumption spending. And some of these taxes actually go towards welfare. And welfare is not a component of government expenditure, it's a component of consumption expenditure. So taxes get taken as a leakage, and then they flow back through pensions and welfare and all these kind of things, which will increase consumption expenditure. So there's just sort of the two arrows where it's a little bit different in terms of where they flow. Notice the dashed purple line leading back to consumption represents that a portion of savings is not spent on investment goods, but instead it is purchased for consumption goods, like white goods, clothes and holidays. Notice the dashed purple line leading back to consumption represents the portion of taxes that is not spent by governments on goods and services, but is instead paid as transfer payments, like New Start allowance. Okay, so you've got your four flows, and I'll just go through these relatively quickly. Flow 1, supply of labour, capital and natural resources from the household sector to the business sector. Flow 2, payment of incomes, wages, interest, rents. Anyone that sells their resources generates some income. Flow 3 is annual spending or aggregate demand, total demand on Australian goods and services. Okay, this flow shows us that households have been paid income, and a proportion of their income will be leaked from the economic flow into taxes, imports or savings. A proportion of leakages will be injected back in the form of government spending, exports and investment spending. Just explaining the circular flow. And then flow 4 is the final market value of a nation's production, or our GDP. So higher aggregate demand leads to higher real GDP. It is not until spending, or flow 3, has run through the business sector that it can be turned into goods and services. Okay, without that demand, we're not going to produce goods and services. Therefore, it can be said that the level of spending alone in an economy is useless without the existence of firm willing to convert spending into goods and services. Which makes sense. There's no point in having demand if we can't produce it. The value of flow 4 is measured by gross domestic product. Okay, we're going to play a game next time.